So, ladies and gentlemen, good morning and welcome to another live trading webinar. My name is Theo for those who join us for first time, and here at Admirals, we really like to welcome you, and we are excited for another live trading webinar. So, as usual, our risk warning simply states that this content is for general information only and is not intended to provide any kind of personal or investment advice or any recommendation. And for keeping up with the news, the significant news events in the Forex market that affecting always the price move, please visit our podcast section on the website, on Admirals website. I will send you the link just in case you don't have it yet. Every Monday, I record the podcast 3 to 5 minute maximum. Rarely I will go to 5 minutes, but usually it's 3.5 minutes, and you know exactly what to anticipate in the market. So, good morning, Larry. Larry said, good morning, Theo. Good morning back to you. Zarabayat, good morning, Theo and all. Good morning, Zarabayat. Mogiol, good morning, Mr. Theo and all. Good morning to you, Mogiol, as well. Mr. Carlos, morning. Good morning, my friend. Maria Julia, good morning. Good morning, Maria. I see already 2 likes also on the video. That's 3 likes. Oh my God, that's impressive. Just 2 minutes on this webinar. And thank you for appreciating this, guys. Let's just get straight to the charts. Remember, today we have the Bank of England and the National Switzerland Bank reporting their interest rates. And it's going to be, I think, 12 o'clock GMT or broker time. Let me double check. Is 12 GMT, so 2 p.m. broker time. William said good morning. Good morning, William. And Zoom user, good morning, sir. Good morning, my friend. Let's go back to chart. Sorin, good morning. Good morning, Sorin. Vladimir, good morning. Good morning, Vladimir. Palmier said good morning. Good morning, Palmier. Now, pound US dollar. Yesterday, during the Asia and a part of the London session, just a couple of hours, we had this bearish candle, but in the more active London session and during the New York session, the buyers, they stepped in with this bullish engulfing. Minimal activity during the Tokyo session, as we can see from this price action here, only 20 pips move from the high to the low, and that shows that the markets are really anticipating the fundamental pound event. So I will be keen to buy rather than sell the pound today based on the news events, but also technically we are on my execution time frame. I see an uptrend. So when I see an uptrend, I tend to buy. For a 5-minute chart trader, the analysis here shows that there is a downtrend. But remember, this is just for 5-minute duration. A 5-minute trader may enter at the break of the low here and a stop loss above there, expected to make double this distance, which is about 7 pips. If I'm right. Yeah, it's about 8 pips. And to profit from a small fluctuation of the price. Euro US dollar. On the daily chart yesterday, we saw what I explained you in detail yesterday, guys. And this appears in all time frames, day in, day out, no exception. I'm sure that if you follow what I teach you here, you're going to end up being a skillful and a profitable trader. Why? Because market repeat itself, price action repeat itself in a different way, in a different market conditions, but under similar behavior. Like buyers here, very strong, surpass their resistance line. Sellers, they try, or buyers and sellers, they had an argument here about who is going to win the battle. Okay, as we are coming from this upward momentum, we had this pause. Now, this pause, this dodgy candle can indicate either these buyers, they are keen to resume their buying activity, or sellers, they're going to take control. And we see price make a lower low and lower high. But it shows that sellers to control, but how? With a very small activity. And what does it mean to us? From a logical perspective, it means that, hey, if all these people who were buying, they turn to be a seller now, then we should have seen a strong move to the downside, a candle like this, like this, like this, like this, like this one. We just see a minimal move here. Why is that? In an uptrend, a minimal retracement simply shows weakness from the opposite force, from the sellers. Yesterday, sorry, 2 days ago then, we said that if we don't see so we were analyzing yesterday's market activity. If we don't see a strong close from this candle, yesterday we were expecting to see buying pressure coming in the market because sellers are not there. They just, it looks like these guys, they are just taking profits out of the market, and there are no selling force coming in to bring momentum to sell off this euro US dollar. Yesterday, we had this move to the upside. We create a higher high. Now, the next area of resistance for a daily chart trader is surely this high of the candle. Now, there is also another resistance right up here. This is 40 pips. I won't treat it as a zone, guys. Why I won't treat this as a zone? Because in this currency pair, if you plot the ATR indicator, you will see that the average true range of this currency pair right now, it's about 60 to 70 pips. So a 40 pip move, it's a significant move for this currency pair right now. Therefore, I'm not going to treat it as a zone. If it was 5-10 pips, I would have treated it as a zone. I give only up to 5% to create a zone. Now, if you were trading the weekly chart, these 40 pips, yes, there will be a significant zone, and we would have drawn as a zone, not as a separate line. Guys, does it make sense? I see a lot of people, they get confused, I would say, when they want to draw zones and support and resistance. They just treat everything as a zone. They might gonna take this area here. We have this low, we have this bottom here. Okay, let's put it as a zone. This one, it's 60 pips. It's a hell of a daily move of this currency pair. So we have to be cautious about what we do. Thomas, join us. Good morning, Thomas. Binyam, good morning. Let's move on. Australian dollar, US dollar. Bullish engulfing yesterday on the Australian dollar, but under what market conditions? Not in an uptrend anymore. The uptrend trend line, the upward trend line, broke decisively. We had two candles close below the trend line, and then a retest right at this resistance. And we see from early this morning that the market is selling off. Weakness on the Australian dollar. New Zealand US dollar, I really don't understand what's going on. Doesn't make sense to me. It's not something clear. USD JPY, again, an attempt from buyers to take control. They false break out this area of resistance. Now, who's going to win the battle? We had a nice bullish close yesterday. We are right at resistance. Chances are 50-50. We can play the breakout here with a tight stop loss, but we have to be prepared that maybe it's going to be a false breakout in the market. We move to the downside. USD Canadian dollar. And as I explained you numerous of times, the market is in a downtrend. Small bodies trying to make a higher high. But where do we see higher highs, but relatively to the market structure, what is these higher highs are doing? Absolutely nothing. They are just trying to stay as much as possible in this kind of retracement. And yesterday we saw the sellers, boom, taking control, create a new low. And today I'm expecting to see some continuation, not because I'm smart or I know something. No, I am smart. Like everyone else, we are all smart. We just read the price action. Yeah, some jokes are nice early in the morning. So I'm bearish on this one. Pound CHF, we have both major, both banks, let's say, from both countries. They are about to report their interest rates. So we have to be patient and see who is going to win the battle. But definitely, I wouldn't go to place any trade in this one because it's a very risky. Again, if one of the two banks, they're not going to confirm the forecast, because pretty much now the forecast is known to everyone, right? So everyone is expecting to see the Switzerland National Bank raise interest rates, and everyone is expected to read a positive rate in the interest rates of on behalf of the Bank of England. So who is going to win the battle between the pound and the CHF? That's the question. And guys, our job as traders is not to answer unknown questions. It's not to forecast the news. Or to say, okay, this happened and this is going to happen. No, our job is to read the chart, identify patterns that during the years they give probabilities of success, and based on that to place trades according to a strict risk management rules and wait for the outcome. Euro JPY, higher highs, higher lows, still in an uptrend. Dynamic upside momentum. Therefore, we use dynamic indicators like the moving averages to capture some of the retracements if you would like. Again, it's not something I do personally consistency because it doesn't resonate with my character as a trader. I have the moving averages just to spot some trends, or just because I used to have them on the charts and I just have them. They don't bother me if they are here or not. But if you are trading moving averages, please be mindful that they are trend followers indicators. They work best on trending markets, and they are lagging indicators. When the moving averages, when the price is going to show the trend, the moving averages, they're going to be far apart the one from each other. If you are using at least two moving averages, it shows that the price is getting away and away from the average. That's why we call the moving average. And the distance between the two is widened, and it shows strong trend. But at some point, trend reverses and moves to the opposite direction. And moving averages, they don't capture that move. So if you're going to choose to trade trends with moving averages, you have to be consistent, because yes, you have lucrative reward to risk when you trade them, but they have the lowest success ratio, not reward to risk. They have the highest reward to risk, but they have the lowest success ratio. Let's move on. Pound JPY, still bullish on this one, of course. This is the daily chart. If you go to the 12-hour time frame, you're going to see similar activity with the euro and the JPY. But as many of you said that you don't have in your disposal the 12-hour time frame, and if you want, I can go back to the daily chart and do analysis for you. Australian dollar, JPY, Australian dollar relatively weak, JPY also weak, but so I'm not interested to do anything with this one. Rumen and Cherry, good morning, guys. Zarabayad, would you see Euro US dollar retrace before continuing uptrend? I don't see the Euro US dollar retracing more, simply because it was in a retracement and now it's explosive in a upside momentum. So I go with the price. I follow what the price shows, and the yesterday's candle revealed strong buying pressure. So today, and there is not, it's not sitting at resistance. So today I will be looking to buy it. Let's read some of the comments. Siras, yes, Siras said that, yes, I'm one who is confused about zones. All right, so I hope this webinar is make it crystal clear. I will give you another example about zones, guys. Let me find the EuroCAD, for example. Insert oscillator average true range. Let's go on the daily chart. Okay, the average true range of the Euro Canadian dollar based on the last 14 days is 82 pips. Let's say 80 pips. So if I want to draw support and resistance, let me get rid of the indicator. If I want to draw support and resistance based on where I am, okay, I see a resistance up here, and I also see a resistance up there. So this distance between the two is 26 pips. Now, the average true range is 80 pips. It's about a quarter, these two, they are about a quarter of the average true range. So in this particular case, on the daily chart, I'm gonna treat this as a zone because it's just a quarter. Let's give a rule that we're gonna just stick to a quarter of the average true range to give the zones, to create some structure. So I can treat this as a zone. And why I choose the Euro Canadian dollar? Because it has a spread of about 5 to 7 pips. Now, a 5 to 7 pip spread and an average true range of 80 pip. Imagine if the price is going to tap into the zone, it's if the from the two lines of the spread, the lower it's going to tap into the zone, the higher the bid price, it's going to be 6 or 7 pips inside already this zone. So it left only another 10 pips for the price move, taking consideration the spread. That's why on this particular currency pair, or on the Euro New Zealand, Pound New Zealand, where the spreads are also wider, and we have a high ATR reading number, we can treat 10, 20 pips as a zone. But if you go with 20 or 30 pips to treat this as a zone on the Euro US dollar, where the spread is 1.5 pips maximum, and or on the pound or on the Aussie US dollar, and you try to take a 40 or 50 pips as a zone, it just doesn't give you room to trade, and it's not appropriate for these occasions. Biniam asked for the Euro JPY, we just covered it. William said earlier, I follow this ATR webinar, William said earlier, I followed this ATR webinar, but no one told me this explication. Theo, thank you for that. You are very welcome, William. Guys, allow me to say crystal clear that doesn't mean that anyone who does webinar, it's also an experienced trader. Two different things. To know something from textbook and just put it in front of a screen, it's a different thing. Many people can do it. But to tell you the insights of how the markets are moving and why, and in each currency pair, when to trade it, why to trade it this way, when not to trade it, it requires really someone who really knows this thing. Okay, and I'm glad you acknowledge that, and I'm really happy to do all these webinars for you guys. Ruben, good morning. Theo, good morning. Ruben, Senik, DAX 40, my friend. Of course we're going to go to DAX. Senik asked also about the gold. Yeah, that's the Euro CAD. We're going to have a look at the gold, but first we will check the DAX 40 for the trading. So yesterday, another nice sell-off of the DAX, and let's clean the chart a little bit. So the recent support I see is this one here, this low here, and then this low there. So we have this support. The next support I can see from here is this point here. And the recent resistance I can see is not the high of the current price, but the price before. I go to the 4-hour chart, zoom out to see on the left if there is any other support or resistance that I missed out. So we have on the DAX, we have 8 points on an average true range, which is a significant, and we have 8 points different between the one support from the other. So in this case, we can treat it as a zone. Nothing wrong with that. 8 points is not as significant, but for a 5 minute, 1 minute scalping, the previous, this resistance, it's very far away from the current price. So we're going to just keep it here, and let's move on to the 5 minute time frame, and we're going to have some more clarity here. Now, I identified a pattern that calls descending triangle, and it's this one here. Market makes a lower low, and at some point it stops making a lower lows, but it makes lower highs. It means every time the buyers, they try to take control of the market, the sellers, they push it lower and lower. Now, I will definitely expect some retracement, and this is not an easy pair to trade or easy market setup to trade. But if we're going to have some more push to the upside in the next couple of minutes before the London Open, I will be looking to trade the descending triangle pattern. And if we're going to see a break to the upside, I will be looking to buy if the price pushes above this high here. So I place a buy stop above this high here because I would like to be in a trade after I cleaned up the trend line. Let's check what's going to happen in the next minute, and we're going to decide how we're going to play out the sell order. David asked, do you day trade? David said, I can see a lot of trades on your charts. I do trade every single day except when I'm on annual leave. I do not day trade. I'm very specific on the times I trade intraday, on the pairs or any instrument in general I trade. But when it comes to swing trading, I trade on the 12-hour time frame, David. And 1 second, guys, I will go for a sell order, sell stop order here for this descending triangle pattern. Let's see if the market, it's going to take the order. And if it's going to take the order, we have 10 pips somewhere here. It took the order to the downside. I'm canceling the buy stop order. I'll be waiting for, guys, 10 pips, 13, 14 pips. I'm out of the trade. Boom. I call it for the day, for the scalping. It's still moving in your favor. If you haven't closed the trade yet and you are in the trade, you are on 20 points profit. Remember, markets, they don't trend forever in one direction. And especially when we do scalp, we have to be very black and white. Okay, we don't have the privilege to give the price room for error. It requires a lot of discipline. That's why I do it live in front of you, so you learn. David asked, so you usually scalp? I scalp every single day, David, every single day. Darshan sometimes said, sometimes we can be yellow too. Of course. The only way to make you speak, Darshan, to write something is when I make a joke like this. That's awesome. Now, guys, I like to have fun as well. It's not just, we have to enjoy what we do. All right. And let's do analysis on the gold daily chart. The market at I was expecting this nice head and shoulder to be continued from this point here, this retracement, but the market seems to just start drifting sideways. I kind of didn't like it. So it's just drifting sideways. Now, this support here from the yesterday's candle, it's not a support that I trust to place a buy order because it's not a double bottom. And why it's not a double bottom? I know many of you are looking for this and say it's a double bottom. No, it's not. A double bottom on a daily chart, you need to have at least 15, 20 in general. For a solid and high probability double bottom, you need to have at least 15, 20 candles, 13, 15 candles at least apart from each time to give time for the price to move away from the support and then come back and reaches the support, but after some time, not just it didn't work here, any 3 sessions in 3 daily sessions, it just reaches the support. What's that? That doesn't show any significance from the buyers. If 1 million people were buying here and they push the price higher, then they should have continue buying, right? If that was a significant point in the market. Let's see what the DAX is doing. Okay, it's trying to retrace. All right, guys, I think that's all from me today. Really, if you find some value on this webinar, give us some thumbs up, like, subscribe, like the video, whatever you're gonna do, I will appreciate. Okay, guys, thank you so much. For myself, on behalf of Admirals, we really would like to say a big thank you. Thanks for your support. And again, I'm sure you gain a lot of value. So I look forward to see you tomorrow at the same time. Thank you so much.